Welcome everybody to our session here of the future of challenger banking in ecosystem power play. The goal of this session today is to really talk about the North American challenger bank market and the differences that we've seen in Europe and how North America has progressed over the last few years, and see where specifically it's headed. A couple topics that we'd like to touch on today, and looking forward to bringing in different areas of the ecosystem within the challenger banks in both Canada and North America, and to talk about how we can succeed, how digital banks can work together to progress for the end customers, and then lightly touch on where the ecosystem is going and how partners can work together. So with our panel today, we have different areas of the ecosystem, and so I'll let them introduce themselves, and I'll start over with Howard.
Thanks very much, Chris. My name is Howard Klein. I'm the president of People Payments and Card Services. People's Trust is a leader in fintech partnerships in Canada, as well as traditional payment channels for merchant acquiring and issuing. I'm very excited to be on the panel with you today.
Thanks, Howard. And Miro?
I'm Miro Pavletic. I'm general manager of Credit Sesame out of the US, managing all of the international banking across Canada and the US for Credit Sesame. Also the chief executive for Stack in Canada, digital banking platform that we launched approximately 3 years ago.
And Giles, Sutherland, chief revenue officer at Carta. And so we're an issuer processor, effectively the function that powers people's credit and debit cards that we're familiar with today, but a modern stack that we developed specifically to serve fintechs and the challenger banks. And we're headquartered in Canada, but operating internationally. And Chris, to your comment, have had a lot of experience working with fintechs and challenger banks in Europe and beyond, as well as locally here in the domestic market.
Thanks, guys. So just to kick it off, I think to touch on what we see as the differences between the EU and North America, and I guess in the UK as well. I guess the landscape and the traditional perception that I think we all have heard previous, that the North American challenger bank market is slightly behind, and I think there's a few of us that might disagree to that. And seeing where they're at today. So if I could start off with you, Miro, just to get your perspective on where we're at as a landscape with North American challenger banks and how we see the difference between the two today.
Yeah, I think we've seen a lot of attention in North America in terms of a lot of the players that are out there, seen some incredible growth. And a lot of those challenger banks are now looking at opportunities to possibly go public as well and dovetail a lot of the growth that they've seen. When we see players like SoFi, Chime, MoneyLion, and even other platforms, fintech platforms like Acorns getting into the mix, we see a lot of growth and we see a lot of attraction there. I think you are correct that maybe the European challenger banks did have an earlier start, starting around 2013, 2014. But it looks like over time, especially over the last couple of years, we've seen tremendous growth. And I think it really kind of addresses the whole notion of when you look at the demographic and the public in North America and what they're looking for, especially when it comes to the challenger bank propositions, it's really addressing problems that they can't necessarily overcome with traditional banking products. And really when it comes to managing your own financing, eliminating fees, getting access to your money sooner, those are a lot of the propositions that we've seen that have been extremely successful in North America. We took our platform that we launched in Canada and launched it in the US as well with Credit Sesame. And over the past year, we were able to acquire well over 1 million customers with a very similar proposition, but kind of expanding it more towards financial wellness and really looking towards the wellness and the education of our consumers to provide them not only digital banking services, but insight in terms of how they can improve their credit as well on top. So yeah, we've seen some incredible growth, and we're very excited about the future. We're very excited about looking at partnerships as well and expanding the footprint of existing propositions and bringing fintechs closer together and leveraging maybe some of those single node solutions and bringing them more in towards a platform solution where consumers are looking for an end-to-end view rather than having multiple apps doing multiple things at the same time.
And Giles, you've seen, I guess, both sides of the pond, and some of the European fintechs entering Canada or the US and maybe not as successful. Can you talk a little bit about your thoughts there and maybe the different ways to go to market and what the consumers or end clients as businesses might need that might differentiate?
Yeah, absolutely. And I think it's a really exciting time. I mean, a lot of what you're mentioning, Miro, is really, I think, coming to the forefront in the North American market, and we're seeing a lot of these fintechs really pulling together unique propositions where I think in the past some of the precursors to where we are now, think of like a Green Dot or something else, we're using kind of an interchange prepaid model, not really addressing some of those true consumer needs, and a bit more simplified. And whereas we saw in Europe, partly from the regulatory environment and also creatively coming up with really compelling consumer solutions where interchange wasn't as much of a revenue option, so they were focusing maybe on multi-currency, Revolut or TransferWise providing those solutions. And those, I think, really hit the market well in Europe and gave them scale. As they came over here, maybe in the US market, a travel card with multiple currencies isn't as appealing to the US market, but there are all of these other solutions and unique consumer preferences. And I think that's been a really interesting thing to see. Different regions, both from, I think, a regulatory perspective as well as a consumer preference perspective, really are driving different profiles, different growth patterns for the fintech. So I think there was this expectation that N26 would come over to North America and just automatically have the same success that they had over there with a effectively what was a free debit card and current account model, and that didn't really come together. But I think the exciting place we are now is the North American ecosystem has fully come into its own. Is south of the border in the U.S. in particular. Often we've seen them lagging from whether it's EMV adoption or anything else, but now we're seeing really interesting innovation in terms of how they're coming up with really unique propositions to consumers. And I liked your comment, Miro, about kind of multi-note offerings. I think that's been one of the big learnings we've seen is maybe if the first wave was more of a focused direct proposition, the fintechs that are continuing to grow in Europe and continuing to scale, and one of the IPOs that's coming up from the European group, would be Wise, and that's a pretty significant IPO, and they've got a really interesting model which is very profitable, but it's not just a one-hit solution, so kind of a multi-line offering. And I think that's probably what we're going to keep seeing is solutions that maybe even you call it kind of the rebundling of fintech, where the more financial solutions you can fold into the product offering is really what's going to drive the winners.
And from Howard, from your perspective and a banking perspective, what types of, I guess, fintechs are you looking to bring on? And do you see that targeted approach as we get more mature with the fintechs looking to do more specific features to bring to market to sort of differentiate and enter and address the end customer problems that they're facing today?
Yeah, absolutely. Echoing what Giles said is, Europe has had 20 years of regulation from e-money to payment service directive. So consumers there are very used to, before the notion of challenger banks or fintech, there were already these regulated entities playing a part in the ecosystem. You have the US, which is very fragmented in terms of regulation, and then you have Canada, which has a more, I won't say ubiquitous regulator with OSFI and with FinTrack, but for sure that the model of just build it from Europe and expand into North America doesn't really work that well. You have to really tailor the solution to the market you're in. And we think in Canada, the fintechs that we're bringing on really have to have value to the ecosystem. Just bringing a card to the market and being on interchange reimbursement doesn't really work anymore. Consumers are looking for solutions to solve their problems, and it's hard to argue that in Canada people are necessarily underbanked or underserviced. They may want a better mousetrap, and they may be looking for a better mousetrap. But I think Canada is in a unique position where most of the population has access to decent tools. So it doesn't mean that you can just take something that's successful in the United States, where they maybe have a lot of demographic niches that can be played, whether it's underbanked or underserviced, and translate it into the Canadian space. I think the people coming into Canada really have to understand the Canadian market and deliver solutions that Canadians are looking for.
And I guess to go back to Miro, what are they looking for, I guess, in the Canadian market that you're seeing from your perspective that they're not getting from the traditional financial institutions?
Well, you have to look at the marketplace, and you have to look at the demographics out there. And I mean, everybody knows the statistics out there that the majority of North Americans are living paycheck to paycheck, and they are having a tough time handling their financings month over month. And when they have products out there, especially financial services products that are littered with fees, it makes it even tougher to manage your monthly finances. We've had a couple of social campaigns across Instagram and Facebook, and it's just like, the question is, when have you felt like you've actually made it, when you've succeeded? And some of the comments are pretty astounding. Like when individuals say, you know what, I can't wait for the day that I don't have to check my bank account before I fill up my car. Those are real problems and real issues that people are trying to resolve. And as well, when you compound that, if they are living paycheck to paycheck, then they are probably looking at incremental products out there to kind of fill the gap and void. And some of the products can be predatory. They could be payday loans. They could be very high interest credit cards. So it kind of digs you deeper and deeper. So what we found is individuals are looking for essentially a product that isn't built on the backs of fees, but also gives them a plan and a direction where they could start pulling themselves out of debt and start thinking about the next phase of their life, which is achieving their goals. So that's where we found success, is that always essentially providing products and services that were built for utility, helping them with automating their savings account. A lot of individuals out there, I think the latest stat was over 72% of Canadians have less than $200 saved in their bank account. So when you start thinking about the future and long-term goals, individuals aren't necessarily thinking about, I'm thinking about that retirement cottage out there. They're really thinking about, how am I going to make it to the next month? So if we could provide them tools and utilities that get them there, as well, essentially eliminate those fees that are chipping away at that money that they're so desperately trying to hold on to, it seems like a winning equation. And then when you layer on other products that help them essentially build their credit and build a relationship with credit products, a positive relationship, and those products are there at the right time when they start evolving, then you could have a very long-lasting relationship with that consumer and provide value all the way through.
Yeah, I mean, really good points there. And Giles, obviously, fintechs look to you guys to be able to make those tools accessible through the financial institution or just different access to market. I guess, how do you in Carta decide which features to really invest in to bring to the fintechs so that the end customers can get access?
Yeah, it's a great question. And we've been in an interesting role because we've had an opportunity to work with fintechs and leading players, across geographies. And so we can see, where some of those are, featuring in. And also, recently in January of this year, we were acquired by Mogo, which has kind of a similar, focus as what Miro is describing, really serving the Canadian market, focusing on financial health. And that's been great as well, looking at some of the feature set that they're exploring in terms of bringing in, Miro, I think I'd echo a lot of your comments. I mean, it's been eye-opening to really get a better understanding of, what the true Canadian, financial landscape looks like and how big a feature, financial stress is. But then there's, clearly another layer, both in terms of really some core offerings that a lot of consumers are looking at, whether it's encouraging better saving patterns, opening up more opportunity to, investment. And one of the things I think we're seeing as well is a lot of the space is coming together. So whereas historically you might have seen, a fintech that might be focused on wealth management, or a fintech focused on, payouts to Uber drivers, or one focused on cryptocurrency. Now a lot of these things are coming together and touching each other. And, we've seen, Wealthsimple has a card linked to their account, and we're seeing, core financial apps, like Mogo and others adding in full wealth management and trading platforms, and we're seeing this similar trends within the US as well. All of those things are coming together. So from our perspective, we're effectively plumbing behind the scenes that's intended to make these things work. And so our role is less about maybe defining the roadmap, but one of the things we're I think really seeing as a common denominator is the open integration that's going to keep pulling these things together. And I think that's a trend we're going to see more and more of, which is these players and fintechs coming into the market and looking at ways to seamlessly integrate different offerings, not having the one note solution, but something that really addresses multiple needs of consumers and allows for a lot of frictionless experiences across these different value propositions. And that's where our whole platform is based on the API connectivity, creating kind of a developer friendly environment. And I think that's really kind of what this whole panel is about, is within this ecosystem, all of the different players have to kind of work in concert to come together and connect. And it's the banking providers, the fintech providers, the processors and enablers, the payment networks, et cetera, and then even all within kind of the regulatory backdrop. All of that needs to kind of work well together for it to happen. And I think it's really exciting actually where we're at in the evolution in Canada, because I think you can really start to see a lot of momentum driven by the innovators, driven by the guys that are at the front lines launching these products. And then, a number of the other players within the ecosystem are really helping to kind of further accelerate and propel that forward.
Yeah, and I think part of the perception of different fintechs is really that they're trying to work against each other. But I think, as you both mentioned, the collaboration is actually the priority here to get the buy-in and to bring access. Miro, I know we touched on it earlier, but if you could talk a little bit about that, because I think there's a lot of, obviously with media, written articles and things trying to push and drive against, but I think the actual goal is to work together in access.
Yeah, there's definitely collaboration out there. I mean, when you think about it, when you look at our proposition and any other digital challenger bank proposition, we're not fighting for the same customer. We're not fighting to attract each other's customers. We're actually looking at it way broader. We're looking at, in the US, we're looking at over 110 million people that are serviced by the middle class, and that's a massive marketplace. So we're not looking to steal customers away from digital challenger banks. We're actually looking at serving customers that are underserved by their traditional propositions. As well, like we saw a huge opportunity and kind of Howard touched on it, especially in Canada, very highly regulated. So, just coming in and thinking that, you could just launch a proposition that you've launched elsewhere in the world and kind of drop it into Canada, and rightfully so, has a very highly regulated ecosystem, but also as well has a pretty complicated partnership format, what it takes to essentially launch a program like this. And we saw, a lot of other players out there trying to get into the marketplace, and there were some challenges there to, figure out the regulations, the players, you name it. And we saw that as a huge opportunity to kind of take our expertise and essentially provide our platform as a service to other brands out there. And really looking at other fintech players who essentially have established customer bases, but are looking to launch financial services, white labeling our platform out to them. So we've successfully done that in Canada with the launch of Aura. We've partnered with credit unions, Celero Solutions, over 120 credit unions across Canada. We took that format as well and launched it in the US by being able to partner with Credit Sesame, leading to our acquisition. But essentially, we took our platform, white labeled it, and launched it in the US as well. So not only did we launch it in Canada, we launched it in the US. And now we've got the attention of a lot of major brands out there. We just signed a partnership to work with Quantum Pay, who essentially works directly with McLaren and the Formula One teams across the globe to essentially start launching card programs, not just in Canada and the US, but looking to expand into Europe, into South America as well. And we're working with some very big fintechs as well that are serving a different consumer, but that are looking to launch digital banking services as well. So we've been able to kind of broaden our footprint and not just only have our B2C business where we're directly providing really good and strong customer services and banking services to our clientele. But we've also been able to expand that out to large brands that have existing customer bases and being able to now light up digital banking services for them as a service out there. So it's essentially looking at, the opportunity of banking as a service or even money as a service, and providing that to other fintechs out there.
Yeah, it's a really interesting time to be able to really transition into that world off of the digital bank and using what you guys have learned to take it to market in more of an infrastructure play. Howard, at People's, essentially in Canada, you are the go-to program as a service model. Could you talk a little bit about, I guess, fintechs that are interested? Is there a lot of knowledge around that educational piece, or do you guys really provide that step-by-step solution to be able to get to market and be able to launch the successful fintechs that you do?
Yeah, we're very agnostic when it comes to the fintechs coming to us. We don't have a particular client that we're looking for. We really try to understand what the fintech wants to bring to market and help them build a bespoke solution. We think we're a great partner because we don't compete with our fintechs, right? Unlike most of the other banks in Canada that have retail presences and direct-to-consumer business, when they get into partnerships with a fintech, ultimately the antibodies of that organization come and try to crush these ideas because it's competing with a core offering. At People's, we really try to work with these fintechs because we don't have any all of our, even on our traditional banking side, we really work through partnerships, and so it's in our DNA, and we really help the fintech understand, hey, how do you translate? You're highly regulated in Europe, and you know what you're doing in Europe, and you're a unicorn in Europe, but you're coming into Canada, and how do you translate what you're doing from a risk point of view, a KYC point of view, a compliance point of view, and help them bridge that gap? Same thing coming from the US. It's the same but different, and I think that we're part of our strength is really not just saying, look, go read the FinTrack regs and figure it out yourself. It's really helping the fintech put the solution together, working with partners like Miro and Giles, is figuring out what the ecosystem needs, right? Because if fintech A needs something, it's like that fintech B is going to need it. And we work with companies like Carta and say, hey, you know what, this is coming up as a request. How can you help us solve for that on the processing platform? Or how can we help the fintech solve something that's coming up from a regulatory point of view? What do we have to do to help our regulators understand, what the fintechs need, and help lobby and try to influence, what's going on in the ecosystem?
Yeah, and there's a point earlier that you mentioned, and I'll leave this one up to whoever wants to take it to start. But a lot of the European fintechs really made their success off of basically the swipe of the card and looking to do interchange and making their revenue off interchange. And obviously we've seen in the past 12 to 14 months that it couldn't really be relied on that source of revenue. Could we talk about, I guess, the transition of the fintechs here and their source of revenue and where they're getting valuated within that today, and how to move forward with that opportunity?
Yeah, maybe Chris, I can maybe start with that. I think North America, Al Kelly from Visa said that North America is like an interchange island, right? In the sense that we have very high levels of interchange reimbursement compared to the rest of the world. And that allows certain fintechs to operate with a model that maybe isn't sustainable in Europe, where you have very low swipe fees. So I think, we should expect, and our government in Canada has made no qualms about telling people that they expect interchange revenues to be decreased and merchant fees to be decreased. So I think fintechs have to start figuring out what other sources of revenue they can bring to the table, whether that's lending, whether that's installment financing, whether that's mortgages. There's a whole bunch of fees of products that can be brought to the market, not just fees on point of sale swipe transactions.
Yeah, Chris, and as well, partnering with services like yourselves with with Currencycloud. Remittance is a massive opportunity, right? Especially in Canada. Canada are very high remitters. You know, myself coming from capital markets and CIBC, I worked on global remittance platforms and launched those platforms. And those are massive revenue opportunities as well to kind of layer on those traditional banking products. I do agree with Howard is that, you know, if you are a digital challenger bank, you can't just go out there and think that you can rely on interchange to run your business and grow. Interchange is kind of that baseline lights on source of revenue that kind of keeps the business going. But really to grow, you need to find incremental revenue sources to bring in there and not only provide value add back to your consumers as well. So yeah, completely agree. You can't rely just on interchange alone.
Mm-hmm. Yeah, and you know, from a federal perspective, it looks like there's some, you know, potential on the horizon that interchange rates might get some downward pressure. In which case, you know, I think that would, you know, impact fintechs that are, you know, having that, even if it's just one element of their revenue stream. You know, I think the worst case scenario would be, you know, if the fintechs don't have the other, you know, revenue lines and value proposition, you know, that would be potentially, you know, crippling if that was, you know, what they were relying on. You know, clearly banks are relying on a number of other revenue streams. And even if it's just the pure checking account, you know, the overdraft and other fees, you know, are probably giving them a pretty significant revenue stream to make those customers profitable that a lot of the fintechs wouldn't. So, you know, I think it's, you know, there's no choice about it, you know, whether from a consumer perspective or just, you know, the, you know, survival going forward. You know, I think we're going to see the fintechs really layering in a lot of solutions. And, you know, I think that's been the recurring theme. And, you know, exactly, Miro, you pointed out, you know, Currencycloud and the role you guys are playing, you know, in the industry and others. I mean, it's really going to be bringing in a number of services. And I think that's, you know, probably where we're at in terms of the evolution of the space as well. You know, I think a lot of fintech started with this unbundling of services, and you would find one element of what a traditional bank might do and do it a little better, faster, cheaper than they are doing it. And a lot of consumers are certainly focused on, you know, what's addressing those needs. And we, you know, fintechs were able to exploit some of the weaknesses of banks because of their legacy and siloed systems. Now I think it's exciting to see that these fintechs that are built on, you know, modern platforms, using modern tools, using bank partners like People's that are, you know, doing more than just providing the issuance services. You know, People's is plugged in and providing a number of those critical pieces that the fintechs need. You know, they're able to actually come together and, you know, almost rebuild a lot of those offerings that the banks would have from these traditional, you know, all under one roof, but in silos, now using, you know, modern partners, modern tech, you know, ecosystem players to come up with some really interesting solutions that bring kind of a multi-layer proposition to the consumers, which is really exciting to see.
And on that, with the innovation and how the fintechs are really, you know, pushing the borders for what the consumers would need. Howard, do you see the regulatory aspect, specifically in Canada, moving as fast as the fintechs? Obviously, we really have to be, I guess, we can only do what the regulation is, but is it moving fast enough to be able to support what the end customer needs in that regard?
Yeah, you know, I think the technology is definitely advancing way faster than the regulations, which is true in you know, in the history of banking and internet and technology. I think, you know, Canada is probably a little bit behind Europe for sure, behind Europe. You know, the US is, I think, even though it's much more fragmented on the state-by-state basis for certain things, they still have a longer history of fintech partnerships, and the regulators are, I think, well-versed in that compared to Canada. So I think the regulations that are coming down the pipe will help. I think it will remove some of the friction that, you know, People's has with, you know, with explaining to the fintechs why things have to be done this way. So it's not always, you know, when a fintech is regulated, they'll have their own obligations, they'll have their own responsibilities to, you know, to the Bank of Canada or wherever else ends up regulating them. And, you know, I think that will remove some friction from the ecosystem. But definitely, I think the regulations haven't caught up, and I think we're always going to be in that catch-up position. But, you know, I think most people are good actors in the ecosystem, whether they're regulated or they're not, and want to do the right thing. But definitely the upcoming regulations will certainly help level set and make sure that the playing field is, you know, is balanced and level.
And do we feel like as a, you know, as an ecosystem, there could be opportunity to basically educate regulators on what I guess the innovation is trying to do. Maybe there are a few sandboxes in different locations that are working with the local regulators to understand, I guess, what they're trying to do. Do you guys see opportunity there that we can do as an ecosystem to bring education to the market?
Yeah, for sure. I mean, we've been working very closely with the regulators. We've had multiple sessions. We work with one of the biggest champions out there, Colin Deacon, which has been, paramount in terms of pushing forward open banking. But I think at the same time as well is that, if you're coming from the industry, the big opportunity that an innovator can do out there is take a look at the existing regulations that you have, work within them, but then really innovate on the product itself and what you're providing back to the consumer. Because as Howard mentioned, we're highly regulated in Canada. We're very highly regulated in the US. But I think the opportunity that we have is taking that expertise that we've learned in the marketplace and seeing how we can essentially alter products and essentially manipulate them to provide better services back to the consumers. The one thing that we're really pushing forward on in innovation is the whole idea of credit and how credit looks like to a consumer. And, recently everyone's been looking at buy now, pay later features out there, which are great. It provides essentially incremental credit to a consumer at point of sale. So they could essentially, purchase something for $1,000 and spread those payments across 4 equal payments. The way that we're looking to innovate that is right now, a lot of the buy now, pay later solutions out there are very dependent on the merchants and the merchants signing up. But if we could provide a solution where we were agnostic to the merchant and we could provide that service on top of an account and the consumer can essentially access buy now, pay later at any merchant anywhere in the world, that's a huge opportunity that we see. So it's essentially looking at the existing regulations out there, but looking far beyond it in terms of innovation and seeing how we can essentially innovate on top of that regulatory framework to provide these incredible products that consumers are really looking for.
Peoples was one of the founding members of the Paytechs of Canada, which is really looking towards, and I know Miro's part of that as well, to educate regulators on what's coming down the pipe from a technology point of view, and ensuring that we can't go to the regulators and ask for everything all at once. There's a safety and soundness issue, and it's very important that the industry speaks with one voice and addresses the issues that are coming up. That's going to benefit everyone in the ecosystem, as opposed to pick winners and losers in that ecosystem.
And we do have a question that sort of directs right at this, and I guess I'll direct it to you, Howard. Is does the panel feel that the central banks and regulators may want to regulate some of the fintechs directly, and then what impacts could that have overall? Yeah,
look, I think there's no question that the regulations coming, whether that's in 2022 or 2023, it's going to be beneficial. I think some fintechs want to be regulated. They're raising their hands and say, please regulate me. Others are very happy to have a partnership model with a bank and don't want to go through, that headache and that time suck and money suck of getting regulated. But ultimately, I think what it's going to do is lend more, trust to the ecosystem, whether that fintech is regulated or not. The fact that the government wants to ensure that there's rules, I think the level playing field is very important. I think making sure that customers know that if they're going to a fintech, they're going to be protected the same way they're going to a bank. If they're doing a money transfer, they're going to be protected the same way with a fintech as they were going with an incumbent. I think it's important to have that safety and soundness in the ecosystem. And I think fintechs largely are not trying to skirt regulation. I think they're trying to be included in that regulation.
Yeah, and so to transition over to both Giles and Miro, both of you have gone through an acquisition in the last year or two. I guess to touch on that a little bit. Do you see that happening more? Moving forward, as to and I guess the advantages of doing that further than partnering and working together in parallel. If you could talk a little bit about the benefits there and what it's brought both of you guys, moving forward.
Yeah,
sure.
Oh, go ahead, Giles.
And from our side, I think in terms of the advantages, a big part of it, I think, is being able to build out a platform that's ready for scale. And I think we're seeing that across the ecosystem globally. We're seeing massive financing raises. We're seeing IPOs across the board. In Europe, in the US, and I think that's you could have chalked that up to overheated market or something else. But at the end of the day, I think we're really seeing fintech coming to its own, and delivering services that are fit for market and are ready for prime time. And I think the scale is a fundamental part of it, being able to really bring these things together. So I think we're going to continue to see more consolidation, and I think it's also points to the multidimensional aspect of the space. So in our perspective, and actually the recent SPAC/IPO of Galileo and SoFi, which was kind of a similar concept of a B2C lending, consumer-facing fintech plus a B2B issuing processing platform. These are interesting concepts where obviously they're all part of a similar kind of value chain and product offering, but also you're seeing the complementary nature of these different drivers. So for our business, we have a global focus. We're working with enabling fintechs, purely a platform B2B play. Globally, we're partnering with a B2C, fintech app in Canada, providing two basically growth engines under one umbrella, which gives a lot of positive reinforcement to each other. It's some interesting learnings. A lot of the things we're talking about here today, it's great to have a tight partnership with that frontline innovator that we can then incorporate into some of our learning, whether that's launching products here in Canada or beyond. And similarly, we're taking our learnings from working with fintechs in Europe and the US and elsewhere, and helping bring that to light here in Canada. So I think there's a lot of complementary nature, and I think as we're moving into the kind of next phases of the industry, really focusing and driving these things from maybe what in the past has been maybe operating more within targeted niches. Now I think even in the US, you see like the valuation of someone like a Chime. These are mainstream players now, and I think with open banking, kind of the link from the last question and other regulations, we're going to see these really start to take center stage in the market, as opposed to this up and coming position that we've had in the past.
Yeah, I think as well, like those are some great points, and the whole opportunity of consolidation and bringing businesses together is the whole idea of expanding your footprint. Really, we saw that with Credit Sesame and the acquisition of Stack, is that we were both addressing certain needs of consumers, but when you brought the two businesses together, there were some very amazing synergies that happened, where essentially you could take an established customer base and light up a net new product from that acquisition, and essentially light up a net new revenue stream as well. That's been a great approach in terms of what Credit Sesame and Stack have been doing. We're going to be announcing our latest financing round tomorrow. And with that as well, there was an acquisition that we made in the US in terms of acquiring a rent reporting company. So it's the whole idea of layering on services and layering on customer bases as well on top of those services that create some incredible synergies and platforms. And that's really the way that we're looking at it moving forward, is that, we can be a B2C company and we can go out there and acquire every individual customer out there. But on a grander scale, is there an opportunity to look at other solutions that are out there that we can essentially layer onto ours, be it money management, wealth management, be it rent reporting, be it other value-added services that we can layer on that have existing customer bases, that if we brought those two businesses together, you realize incremental revenue that you couldn't realize on your own. That's really the opportunity that we see moving forward. I think we've been very public about our intent to go public as well in the next 12 months. We're really driving to those factors and driving to create essentially a platform, an end-to-end platform that's all about financial wellness. So when we look at other fintechs out there, we not only look for partnerships, we look at opportunities to actually bring the businesses together as well to help us get to that next level.
And there's a few questions from the attendees here that I'd like to address while we have some time. The first one, I'll leave it up to one of you guys to take it, is what's the panel's view on the opportunity that consumer-directed finance will bring to the Canadian market?
Look, I think today open banking, while it's not officially here, is kind of here with the Plaids and the MXs and the Flinks of the world, and consumers are using their data to get early access to payroll, buy now, pay later. So I think that's going to help. I think it's going to provide opportunities to fintechs, banks like us, to be able to look. It's very bank accounts are very sticky. It's very hard to move. There's a reason why banks offer $600 and iPads to get people to switch bank accounts, because there's a lot of value into having that there. And I think the easier it is for consumers to control their own data in the ecosystem and be able to migrate that data from one institution to the other, I think it's gonna be very good for the Canadian consumer.
Yeah, I agree, and I think we're seeing that impact in multiple jurisdictions, both in Europe, North America as well. We have another question as well. Given the regulatory reforms to connect fintechs into the RealTime Rail may be implemented sometime after the launch of the RTR, will fintechs be prepared to be late entrants to the market, thus lose obviously the first mover advantage?
We're ready. I mean, we've been ready since the day that we started. The whole reason why we created our platform was to essentially be that API cloud-based platform where essentially we could look at any partner out there anywhere in the world and easily connect to them. So when real-time rails are available, we're more than ready to consume those services as part of our platform. I think if you're going to win and you're going to grow, you really have to approach it that way and look at any integration as a possible integration into your ecosystem. And if you can't, you better figure it out pretty quickly, because you might miss some opportunities out there.
Yeah, I think that there is definitely a timing issue where the RTR may be lit up before fintechs can maybe connect directly into the RTR. People's will be enabling that for fintechs, right? So to the extent that a fintech needs to bridge a gap, there is a partnership model that we have that works very well on issuing and acquiring that we would want to bring, so that fintechs shouldn't. I think they can still have their first mover advantage to be able to bring the service, but they have to have the right partner. I can't speak for other banks, but certainly we would be very open to partnering with a fintech to bring their solution to market.
And that brings up a good point, Howard. Is obviously being a bank and getting access to those opportunities, and with your model being able to offer those as a service. I guess from your perspective, how do you get into those opportunities, and how do you decide which ones to take advantage of to be able to offer as a service?
Yeah, we try. Like Giles and Miro said, we try to build our ecosystem to scale and try to make it as API friendly as possible. So it's not a matter of lots of manual work that we have to do. Ultimately, we want to make sure that the fintechs that we partner with are bringing value to the ecosystem. Compliance is the utmost concern. So there's a lot of people that come to us. They don't understand. They have an idea, but they don't understand. They don't know what they don't know. Maybe is the better way of saying it. And sometimes they don't want to educate themselves. So we take compliance very seriously. That's the utmost. If I lose money on a transaction, that's one thing. But if I lose the confidence of a regulator, that's another. And it's hard to put a price on that. So I think when we look at partners, we want to make sure that they have the compliance is in their DNA, and that they understand where they fit into the ecosystem, and making sure that the value proposition makes sense for Canadians.
Yeah, makes a lot of sense. And then I think coming with some sort of compliant framework would actually, get to that launch pad of being able to offer just a premium service as well. We have another one here. What are the panel's views on the opportunities for and barriers to greater penetration of fintech in the mortgages space? I think we're starting to get into it a bit, and there has been some innovation, at least here in the US, with a few options as well. But if feel free to raise your hand and take that one.
Miro, you go.
Yeah, so I mean, especially with the proposition that we have, and as Howard mentioned, we weren't waiting for open banking to happen. We've integrated with services that allow that. Essentially, it's provided us with consumer consent, access to consumer data. So when we look at a proposition like Credit Sesame, who's been around for 10 years in the U.S., we have access to a tremendous amount of data. When you look at the kind of the existing proposition with digital banks, it really doesn't matter if there's 1 million customers with that bank. When you open up that banking app, you're kind of there by yourself. You don't really get the power of that group behind you and the insight behind that as well. So the way that we look at it is we can provide very valuable insight to a consumer before they even apply for that mortgage. Since we provide all of those incredible credit services, credit scoring, credit risk, credit monitoring, plus the digital banking services, we can kind of figure out essentially the intent of a consumer when they set up a savings account. I want to save for a down payment on my new place. We can essentially then start looking at their data and adjudicate that data before it even gets to a mortgage, where we essentially can pre-qualify those consumers before they even apply. And we've been doing that already in the US. We have multiple mortgage providers that we've partnered with, where essentially we can pre-qualify consumers before they even step into that first home to view it with a sales agent. And there's a big opportunity for us to kind of leverage that solution and bring it to Canada as well. We know that there are tons of mortgage providers out there looking to get access to consumers. And if we can de-risk that model by pre-qualifying those consumers and using the power of data to do that, that's the value add that consumers are trying to achieve. The last thing that they want to do is sit down with a mortgage broker and fill out, 16 pages of documents, go through an approval process, when we're already sitting on that banking data and we can provide that as a service back to the consumers and adjudicate them in real time. That's the opportunity that we definitely see there.
Yeah, I think from even the banking point of view, the mortgage industry is very antiquated and legacy driven. It's very painful for us as an institution. We originate lots of mortgages. You have to work with notaries in Quebec, law firms in other regions. And, the pandemic showed that these industries weren't, prepared to deal with anything being remote. In Quebec, there had to be an emergency authorization to allow DocuSign to be used on notarial documents. And there's talk that it may not even be continued moving forward. So I think Canada is a little bit behind in the US when you compare it to the rocket mortgages of the world, where they've really automated a lot of the processes around there. And I think Canada is ripe for something like that to come to market. Canadians love their mortgages. They, it's almost its own industry. But I think there's definitely room both on the back end to do something, and definitely on the front end, as Miro was mentioning.
We'll leave the next one up to Giles here. How can mid-sized banks and credit unions more effectively engage with fintechs to fill holes in their product offerings?
Yeah, it's a great question. It's one that we've seen and encountered, and probably increasingly so. And I think there's a couple different strategies, and we're seeing them really come out in parallel. So on some cases, and People's is a perfect example of this. There's an incredible opportunity for banks to be platform enablers across the fintech ecosystem, leverage their expertise in compliance, regulatory services, connecting into those rails in a way that they can do it with efficiency and economies of scale that most fintechs won't have. And another that we've seen, for example, here in Canada, ATB Financial launched an entirely new challenger bank brand called Brightside. Carta is the processor for that service, and they basically looked at what they were looking to do, and rather than maybe kind of augment or slightly add in an additional service, they even launched an entirely new brand themselves, and taking advantage of some of those fintech services, from Carta and from other technology players to develop. Sometimes you hear this referred to in the industry as kind of the speedboat. So if the bank is the big tanker, big, slow moving, can't really move fast, maybe there's this speedboat off to the side that gives more agility. And so, I think we're seeing, and even, Miro's been referencing some of these services where, you're seeing banks coming together, utilizing a white label service and other things, and Carta's working on some projects like that as well. So I think there's really kind of a multi-pronged approach to look at what the strategy is, and whether it's trying to focus and enhance the offering to that direct existing consumer base, and the existing customers. Are you looking to expand into new customers, or potentially, play maybe a wider horizontal role across the ecosystem and use the banking services and capabilities to power third parties? And we're seeing all of those taking shape, and that's, I think, a trend. It's maybe a little new to Canada, but you're seeing it certainly in other regions. And I think that's going to be, very much kind of part of the upcoming phase of fintech evolution. And I think the banks, People's is the prime example, but banks obviously play such a critical role in this, especially with all of the airtime we've already given on this panel to the role that the regulatory environment plays and will continue to play going forward.
You know what? And just to expand on that, when you really look at credit unions are the original challenger bank when you think about it, right? They're that regional player that said, you know what, you don't have to go to that traditional bank. We can provide you those services, and we can reward you as well at the same time. And we saw a huge opportunity. Is that the problem is with credit unions is that they don't necessarily have the largest networks. They do have, multiple players within a region. They may have 5 locations. They may even have 20 locations. So the investment in terms of innovation and technology can be quite expensive. So we saw that as a huge opportunity to say, why don't we provide a national loyalty program that could link all of the credit unions together and provide value add back to every consumer out there? So we partnered with Celero Solutions, and we provided that and white labeled our solution out to essentially 120 credit unions out there. And when you look at the traditional debit cards that they had out there, they hadn't innovated. They weren't enabled to essentially work outside of Canada. They weren't even necessarily enabled to use e-commerce platforms. So the idea of using Uber, using Amazon was kind of limited by the product suite. So by us providing them essentially a digital virtual card that they could load into their Amazon Pay, to their Samsung Pay, their Apple Pay, and they could also pay for their Netflix and their Crave and their subscription services, it provided a value add back to the credit unions and really allowed them to kind of leapfrog the traditional banking products and platforms out there.
Yeah, it's a really good point, and I guess, previous to the credit unions being a regional specific, now you're starting to see, at least as far as being access to internet banking and fintech banking, it's more of a niche type of approach rather than a regional type approach. We have time for one more question, and this one is more of a sales pitch for Howard. But you mentioned that challenger banks can provide a host of services to support fintechs that they can't develop in-house. Can you elaborate on what those services are today?
Yeah, so I think we have a suite of services, again, with partners and some homegrown, to provide the ecosystem for someone who has an idea to bring a financial product to market. Peoples can take care of that, that plumbing ecosystem layer of creating, a CDIC insured account, bringing an access card to the market, bringing a mortgage or savings product to the table. So ultimately, we know what we're good at, which is building that foundation layer. We're not great at, customer acquisition strategy and marketing and user interface. And that's where the fintech comes in, and they know what they want to do and how they want to do. And then we're behind the scenes, right? You don't see People's Trust cards in market, People's Trust branded terminals, but we're behind the scenes, and we're very happy in that role. And I think working with, Carta as an example to help bring these solutions to the market. Again, it's not People's going at it alone. Is we partner with people in the ecosystem, and the ecosystem benefits from these collaborations.
We're definitely seeing a lot more of that here in the U.S. is what we call, well, I bet you do as well, Howard, but as that sponsor bank model, and the bank actually takes that infrastructure seat. And allows the fintechs to go and do the customer acquisition. Well, guys, we're up on time here. I believe we can continue the conversation in regards to future questions on the BrainGate networking opportunity there. So appreciate everyone getting on. Really good knowledge for all of our listeners. And everyone, take care.
Thank you.
Thank you.